Welcome to Fintech's Fair Play, where we dive deep into the most important stories shaping the fintech world. Today, we're exploring a significant development. The Consumer Financial Protection Bureau, or CFPB, has ordered Apple and Goldman Sachs to pay a combined $89 million over failures related to the Apple Card. Let's break down what happened, why it matters, and what the future could hold for this high-profile fintech partnership. The CFPB announced that both Apple and Goldman Sachs will face severe penalties and consumer refunds over what they called customer service breakdowns and misrepresentations that impacted hundreds of thousands of Apple Card users. Specifically, Apple has been ordered to pay $25 million in penalties, while Goldman Sachs is facing at least $19.8 million in customer redress and a $45 million penalty. At the heart of the issue is how Apple and Goldman handled customer disputes related to Apple Card transactions. According to the CFPB, Apple failed to send tens of thousands of consumer disputes to Goldman Sachs. Even when disputes were forwarded, Goldman Sachs reportedly did not meet federal requirements for investigating these disputes. This left many customers waiting excessively for their money to be refunded, and some even had incorrect negative information added to their credit reports. The trouble doesn't stop there. The CFPB also claims that Apple and Goldman Sachs misled customers about interest-free payment plans for Apple devices. In some cases, customers were told they'd have no interest charges, but ended up paying additional interest. The regulator found that Goldman Sachs misled customers about the application of certain refunds, which added to interest charges and caused further financial harm. CFPB Director Rohit Chopra had strong words on this case, saying, "This demonstrates that even the most powerful technology and financial companies can fail to meet their legal obligations, causing real financial harm to individuals and families." He emphasized that these issues affected everyday consumers, not just a small segment of the market. But there's more. In addition to the financial penalties, the CFPB has taken another step against Goldman Sachs. It is prohibiting the bank from offering a new consumer credit card unless it can provide a credible plan that demonstrates compliance with federal law. This is a significant blow to both companies, especially considering Apple first selected Goldman Sachs in 2018 to develop and power the Apple Card. There have already been questions about the future of this partnership, particularly as Goldman Sachs has been pulling back from its retail banking operations over the last year. In fact, there's speculation that Apple may switch partners. According to a report from the Wall Street Journal, JP Chase could be in talks to replace Goldman Sachs as Apple's credit card partner. So what does this mean for consumers in the fintech industry? For one, it shows that regulatory scrutiny is rising for even the largest and most established companies in the fintech space. Whether you're Apple, Goldman Sachs, or another player, compliance is critical, and failing to meet standards can result in significant penalties and damaged reputations. For Apple, this incident raises questions about how it will handle its Apple Card operations moving forward. Will it continue to work with Goldman Sachs, or will JP step in? And for Goldman Sachs, this marks another hurdle as it scales back its consumer-facing businesses. The fallout from this case could have lasting impacts on the Apple Card and its future in the competitive world of digital payments. If you're an Apple Card user, these developments are definitely something to keep an eye on. That wraps up today's deep dive into the Apple-Goldman Sachs CFPB case. If you want to stay informed about the latest fintech news, make sure to like this video, subscribe to our channel, and hit the notification bell. Thanks for watching Fintech's Fair Play, your go-to source for expert insights into the fintech world.